Silver, especially as much as it's gone up, it, people might sell off based on investment thesis. But the reality for silver, because it is not optional when it comes to physics and it comes to the demand of what we're trying to build with AI data centers and the electrical grids, all kinds of things, solar farms. Silver is a very small component in terms of the resources required from silver. However, we're not producing enough silver to meet that demand. And the most important thing to understand is that the price of silver is inelastic to these demands because, for example, an AI data center might require less than a percentage of its cost towards silver. It's actually much lower than that. Yet if you don't have silver, it becomes orders of magnitude uh, in terms of cost to the company if you replace silver with anything else. So silver could get to $300 and it will not change the demand for silver. Investment used to be, people used to think, oh, I'm going to invest in silver as an investment, as an inflation hedge. That's a completely inappropriate way of thinking about it because silver demand on the industrial side now represents 70 to 80% of that demand. So if 20% is of an investment or kind of like an inflation hedge, the way gold is, you're only going to see that rise as it kind of goes hand in hand. You're going to see investment rise in silver and the demand for investment in silver, not just because of the price appreciation, but people start understanding the value it brings to the global infrastructure. Why is the critical mineral supply so important? It's because, again, you require these things in order to advance civilization. And now that there's a battle for it, you just you cannot sit on the sidelines. If you're an investor and you're not invested in the resource sector, especially when it comes to metals and mining, you are going to miss out on one of the biggest booms of our generation. We look at the macro. AI, a lot of these things are very speculative. There's hundreds of companies out there, they put the name AI on it, and all of a sudden they're worth 10 times, 40 times, 50 times earnings. But from a macro perspective, and I think it's important for investors to always look kind of like a hierarchy, like a triangle. There's always someone at the top and people at the bottom. Well, AI is at the bottom here because in order to have AI work, you need resources and you need metals, you need critical minerals, you need silver.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only.
Ivan, it's so great to have you on the show. For listeners that are maybe new to your story, do you just want to give a quick background of how you got into the markets and your letter?
I actually started a long time ago in real estate. So I went to school in real estate, was going after my degree in urban land economics. Um, but then things took a very rapid change and I got into the capital markets because a colleague of mine was young and he was involved in it and he was quite successful at an early age. And I thought about it, and there's really no difference between real estate and capital markets and stocks, right? You invest in an asset that you believe where you can add value, and you increase that value, and then you sell it off for more. So, having said that, I actually got well into the capital markets right when the financial collapse happened. So I had done some work before and then ended up wanting to start my own business, whether it's consulting or marketing within the capital markets. And 2008 happened. And so for anybody that was a part of that, not the best time to get into the capital markets. But what I saw was that there was so much blood on the street, yet the world was moving towards what I've been calling over the last 20 years a financial economy. So I know AI is a big part of what everybody's discussing today. But when you look at the potential of AI and what it's going to do, and more so rapidly within the last couple of years and exponentially over the next 5 years, it will take over a lot of jobs, right? There's going to be a major paradigm shift into how we work and how businesses operate. And as a result, the only way to supplement that for citizens, because there's going to be a lack of opportunity in some ways, especially for the older generation, universal basic income will probably come into effect sooner than we think. It's been tested, and we've wrote about this in a newsletter that I have to shareholders and investors for the last 10 years, saying it's coming. And the government has been testing it all across North America and North American cities and smaller jurisdictions, including in Canada and Ontario. I think this was about 5, 10 years ago where they started implementing these tests. So what I realized is in 2008 that all of this shift is going to happen. And if you're not invested in it and you're not investing in the stock market, it's going to be really hard to keep up, not just with the economy, but with inflation and with technology. And about probably 5, 10 years ago, I really made a stink about this in the newsletter that you, and you've seen this with a lot of the big banks where they're buying retail brokers and investment houses to the point where you got young kids on social media now looking at it, seeing all these people driving their Lamborghinis, making money off the stock market, off of crypto and Bitcoin, that is going to be the wave of the future. Like my son, who's 22, is invested in the stock market. And arguably, most people would look at that as, well, when kids like that are investing in the stock market, that's when you know it's getting frothy, right? That's when you know it's a bubble. But I look at it from a completely different standpoint. It's not a bubble. It is actually what has been planned for the economy, because there's nothing else like it that's going to take over other than financial assets. I've been very fortunate to be very successful and very lucky in a lot of the deals that we've worked with. I ran and published, it was called the Equedia Letter. And we are probably one of the longest lasting private investment newsletters out there today with, I would argue, the best track record of any newsletter, especially in the mining space. Like we're probably batting over 800 on all of the deals that we've ever launched. And so even in the last few years alone, and I think this is the difference between some investment newsletter and ours, is we look at these deals as long-term assets, right? When the market's hot, people flip in and out of these mining deals. But what they forget is if it's a good asset, mining is a time-intensive process and it's very capital intensive. It's most of the time, especially with the juniors, it's a negative cash flow business for a long time. So you have to have faith in the asset. And so I took the approach of having faith in the asset, and some of the companies we wrote about and we participated in big financings and continue to buy in the open market over the last 2, 3 years in the down market have now they're all up 300, 400, 500% because they're good assets. And so that's the approach that we've always taken, is we look at the macro and then we dribble it down to what assets will support that macro thesis.
I love that. As our topic today is silver, I feel like you've tied in a lot of things with AI. The government has obviously a lot to do with metal prices right now. From your perspective, I mean, there's a lot of catalysts that are moving silver prices up, but what are you finding, or what do you see as like the key drivers right now? Do you think it is like the geopolitical tensions that we're seeing with Venezuela, Iran, and that gold is running and so is pushing silver up? Or do you really think it's just a supply demand story? Because what's different, I find, and a lot of people have talked about this super cycle in commodities, is the demand supply is vastly different from, the last few times that we've seen it.
I think it's because the world has finally hit a scale where physics starts to matter again. So for a long time, silver was treated like a legacy precious metal, right? Jewelry, coins, that sort of thing, kind of like the way gold has been. But now we're building systems at enormous scale. AI data centers, electric vehicles, solar grids. And so when you do those type of things and expand that type of economy, you cannot ignore material limits. So silver isn't popular because people like it. It's popular because it solves problems that nothing else solves as well as silver does. And so what problem is that exactly? And in today's economy, everything is digital, right? AI, data centers, all of these things. And it comes down to electrical efficiency. And when we talk about that, silver is the best electrical conductor on Earth, right? It's not simply a marketing claim. It's not an inflation hedge. It's measured physical property. So if you're moving massive amounts of electricity at really high speeds, you need something that doesn't have a lot of heat loss. And silver wins that in almost every race. So when you start building things like AI data centers that pulls hundreds of megawatts, which is very heat intensive, and you guys, for anybody invested in cryptocurrency and Bitcoin, you realize how much electricity that actually drains. But one of those is the efficiency of electricity and the heat that's associated with it. And the more heat, anybody who's ever built a gaming system or a PC knows that you want to keep that system as cool as possible. And if you start replacing silver, good luck, right? If you try to replace it with some other type of conductor, you're not going to have a very good, you're not going to have very good success. And so AI data centers pulling hundreds of megawatts, solar farms covering square miles, like these things are massive, electric vehicles drawing power from the grid. Every inefficiency within these systems, it gets multiplied. So heat is extremely expensive. The hotter something is, you got to find ways to cool it. You start losing speed at that level. Failure at that point is absolutely unacceptable because we all rely on the grid and we all are going to rely on these AI data centers. And at that point, silver stops becoming optional.
I know even just the physical demand we're looking at with silver right now, with China adding the export ban, Venezuela. There's so many things that are playing into, if people start calling for that physical demand where we're at. I mean, we've had a 5-year deficit with silver as well. What are you seeing the next, couple months playing out like?
This is never this hasn't changed for, call it, the last 100 years, right? When we talk about energy and then resources, that has always been that has always been there, right? Everybody's been vying for resources. The entire US dollar was built around energy, which is oil, right? We're just transitioning to a different form of currency. And now oil is going to continue to see increased demand as these data centers continue and as our demand for energy continues. Everything is, we call it currency, but what are you trading our currency for, right? Whether let's say you get a job. Well, you're changing your time and your hours and your labor for what? For money. So you can spend it on something else. But labor is a form of energy as well. It's just human energy. So the fight for energy and oil has been hidden around the background for many, many years. And I think the reason why it's come out so much more lately is that people are just covering it more, and we have access to social media to truly understand what this battle for energy really is. That's not going to change. And in fact, it's never going to change, right? Until we have some type of unlimited energy source, it's never going to change. For hundreds of years, the battle for resources has always been there, right? You don't invade a kingdom, for example, because they have people. You invade a kingdom because they've got resources. And that is the same thing we're seeing today. It's just at a scale where people have social media to actually take notice. Silver, especially as much as it's gone up, it people might sell off based on investment thesis. But the reality for silver, because it is not optional when it comes to physics and it comes to the demand of what we're trying to build, with AI data centers and electrical grids, all kinds of things, solar farms. Silver is a very small component in terms of the resources required from silver. However, we're not producing enough silver to meet that demand. And the most important thing to understand is that the price of silver is inelastic to these demands because, for example, an AI data center might require less than a percentage of its cost towards silver. It's actually much lower than that. Yet if you don't have silver, it becomes orders of magnitude in terms of cost to the company if you replace silver with anything else. So silver could get to $300 and it will not change the demand for silver. Investment used to be, people used to think, oh, I'm going to invest in silver as an investment, as an inflation hedge. That's a completely inappropriate way of thinking about it because silver demand on the industrial side now represents 70 to 80% of that demand. So if 20% is of an investment or kind of like an inflation hedge, the way gold is, you're only going to see that rise as it kind of goes hand in hand. You're going to see investment rise in silver and the demand for investment in silver, not just because of the price appreciation, but people start understanding the value it brings to the global infrastructure.
a lot of people were talking about this week that obviously the US added silver to the critical minerals list
Yep.
last year.
Mhm.
And a very good question and point is why isn't Canada? Do, do you have any opinions or thoughts on why we're kind of behind the eight ball on that?
Because I believe Canada is not a country that is, and this is unfortunate because I'm Canadian. And I'll give you one simple rationale. Canada sold off all of its gold because the government said that it is not, it's archaic. It's not a form of currency. It's not anything. It's just a historical, call it figurehead for value. That was when gold was at like $1,000 an ounce. It's at $4,000 an ounce. And when you look at history, the countries that own gold and as it call it a currency hedge or a store of value have always found a way to survive. Now here's something that people don't talk about is Venezuela has a lot of gold. And when the US after the World War won, where did all that gold go? Well, it went to the United States, and the United States is number one holder of gold in the entire world by quite a large amount. So people are talking about Venezuela and the oil, but they have massive gold reserves. And when another nation invades a country with massive gold reserves, as we've just talked about throughout history, you don't invade a country just for, you know, the people. You invade it because of the resources. So it's both oil and gold that Venezuela has.
As you just mentioned, that it's more an industrial demand on the investment side for silver. When you look at that, obviously gold is, the classic safe haven. So how has your
Mhm.
strategy changed, as this last couple of years has unfolded of how you look at commodities, like as far as silver and gold comparatively to maybe, what was the traditional 20 years, 15 years ago of how it was looked at as an investment?
When it comes to critical supply of resources and minerals, I think with the intense geopolitical, let's just say the worst happens and war happens. But what happens during war? The government overspends, so which leads to inflation. And the war is only there, again, going back throughout history. The only times you have war is not because I hate you or you hate me, is because one person has something that you don't have, right? It if that person has more resources, they're going to be the bigger power. And that's what we're seeing today. And when it comes to, for example, industrial demand versus investment demand, again, silver, it's in a league of its own. It's both a precious metal and industrial. So, for example, can you substitute silver with something cheaper like copper? And we've seen copper prices rise as well as a result of all this. Well, copper has higher resistance, but that also means more heat, and that means you require more cooling, and that means you have more failure points. So if your AI system goes down, you don't lose just a few dollars as associated with the cost of silver to produce it. You lose millions of dollars per hour, right? And because silver represents, I'm talking like a minuscule amount, like 0.1% of these total project costs for AI data centers. And it's also your insurance for performance and reliability. Why would you try to change it for anything else? You would look when you're improving these AI data centers at computing power or next generation software, for example, but you're not going to replace silver for it. So it's the same that application and that theory applies to solar, electric vehicles, anything that's related to energy or requires energy. And so silver goes part and parcel with our energy demands, right? Why is oil demand going up? Um, and why is the critical mineral supply so important? It's because, again, you require these things in order to advance civilization. And now that there's a battle for it, you just can't be, you cannot sit on the sidelines. If you're an investor and you're not invested in the resource sector, especially when it comes to metals and mining, you are going to miss out on one of the biggest booms of our generation. So you're going to invest in AI. But again, we look at the macro. AI, a lot of these things are very speculative. There's hundreds of companies out there. They put the name AI on it, and all of a sudden they're worth 10 times, 40 times, 50 times earnings. But what, from a macro perspective, and I think it's important for investors to always look kind of like a hierarchy, like a triangle. There's always someone at the top and people at the bottom. Well, AI is at the bottom here because in order to have AI work, you need resources and you need metals, you need critical minerals, you need silver.
When you look at some of the charts, it's wild. I mean, it says, for some certain ones like vanadium or whatever it is, it's
Yeah.
going to take like 9,000 years to mine to actually get to this supply of the narrative of where everything, like the governments and all that, is telling us as a trajectory of this net zero or everything being on this large scale for AI and everything. When you look at that, is there like certain metals that you particularly like or like certain stories that you particularly like? Because it doesn't look like we're going to ever get to that big narrative, but like somewhere maybe in the middle
Yeah.
might be possible.
Yeah, we're never going to keep up with the demands. That's why, just like everything else, there's it's going to be inflation, right? And again, I go back to talking about in times of war, what do you need? Well, you need to build your defense, you need to build your offense, you need to build infrastructure, right? There's never been a time in history of war where inflation doesn't happen. And if you believe that things are gonna be more intensified, and I'm not entirely sure it will be, but it does seem like it is headed that way. It doesn't matter what resources you're invested in. There's an opportunity. The important thing for investors is to make sure that just because a company says they have silver doesn't mean they're going to be a good asset, right? It has to be the right project. It has to be a project that makes sense. It has to have a project where the management can um, execute as well as finance, right? They have to have the ability to execute on some of these mining projects because mining is very intensive. So just because you say you have a silver asset doesn't mean that silver asset is going to be worth something, right? The way the chart works is the best assets always get going first. And once those are mined out, or this is throughout history. So it used to be when we're talking 1 gram per ton gold, that's used to be low, and now it's not anymore, right? So and that's simply supply and demand, and the fact that we've mined a lot of the resources of high grade resources. We always say grade is king. So if a project comes out with significant grades um, over and over again, and it's consistent amongst the whole project, that's a project you should be looking at. And again, when it comes to mining, there's so many variables, and I think this is where investors get it wrong. If it's underground, you need higher grade, right? If it's a certain type of geology, if it's oxide, you need lower grade because it's easier to mine. And the environmental footprint could be lower as well. So these are all factors you have to consider. But ultimately, it's funny that I'm sure people watch a lot of Elon Musk interviews, and he's been talking about the Kardashev scale, which is how civilization harnesses energy. And you can't get to the next scale until you, one, first harness all the energy of the earth. The next stage, harnessing all of the energy of the sun or in your solar system, and then harnessing the energy outside of the galaxy. The same goes for resources, right? Eventually, we're going to harness a lot of the resources that's in the ground, and those grades are going to get lower, but it's never going to stop, especially if we're looking to advance to the next scale of civilization. And so that's the macro. I think you're going to have times where you're invested in a sector, and it's been like that for quite some time. Like the mining and resource sector, especially in Canada, was dead. But we also saw it come to life when China got involved, started investing in all these resource projects. China has spent the last 10 years, while the United States has been asleep, buying up all of these assets, all of these energy assets, and they were overpaying for all of them. Well, now we know why. And now the US is playing catch up. And when the US is behind something, you can bet your ass that they're going to come out with guns swinging. And that's what's happening today.
Well, it's definitely been the best catalyst for the junior mining sector. As far as when you're looking, what's your investment criteria? Is there like a few things that like are mandatory on the checklist before you'll look at investing in a company? Like, is it management or is it share structure or
Definitely all of the above. You can't have one without the other. If you have a really good asset and it's high grade, and especially today, if you have an asset that's in the United States or somewhere where the United States has access to, um, a lot of the money that's being poured by the US is being poured into things within the US, right? So, in terms of criteria, absolutely management is one of them. Not just a strong geological team, but also the capital market side, the guys that have access to the funds and institutions that are willing to finance the company. And so if they can't promote their project like everything else, it again, because it's a capital intensive and negative cash flow business, until you start to mine, then you're going to be continually diluting. If you're not raising the price of your shares through even marketing and promotion to get people to know that you exist, and you're going to dilute shareholders more. And so this is one of those things where it's called a gray area and it's been ultimately frowned upon because there's been a lot of bad eggs in the industry where they over promote a stock, they sell, they make their money, and all it is one big promotion. But if promotion is combined with a good asset and strong management team, that's where you're going to make the most money. So I would never hesitate to invest in good operators and management team that are willing to spend some money promoting themselves, because it's like everything else. Like, why did Apple have such high valuations? Why does Tesla have such high valuations? Because these guys are the best promoters. And when you have the best promoters behind a company, it not only protects shareholders because they're always bringing new eyeballs to the story to protect dilution. It's a very simple, it's basic mathematics, right? Like don't, if no one's there to buy your stock and no one knows who you are, and let's say you're trading at $1, well, why would someone buy? If you have no new investors, you rely on only existing investors. How are you going to get that stock to rise? Remember, the stock market is an auction house. There's a bid, that means what someone's willing to pay for a stock, and there's the ask, what someone is willing to sell it for at that time. And if you can't get more people on the buy side to buy your stock at a higher price, you have nothing, right? Your stock just remains flat. It's just, again, it's why companies like Sotheby's and all these have made so much money, because they're an auction house. Remember, stocks are an auction. It's an open public auction every single day of the business week. So if you're not out there marketing your material and marketing your company and how good it is, you're going to fall behind and dilute the previous investors before it. So in short, when it comes to criteria, it's absolutely a management team that can promote and execute, and as well as the asset in how strong that asset is, as well as the jurisdiction. A lot of the reasons why we've been so successful is we saw strong management teams and assets that were underappreciated or mismanaged. And if you have a management team that can fix those critical risk issues of that have led to why the stock price has not appreciated, and management can fix that, that to me is a very strong investment criteria. And we've done it time and time again. Like, many years ago, we invested and promoted a company called K92 Mining, and people hated it because it was in Papua New Guinea. And now they're trading at like $24 a share, right? We invested in another company and helped them market their story. There was a company called New Market Gold, and they took over an asset called Fosterville, which to me was one of the most underexplored and mismanaged assets, but had the highest potential at that time. They took it over, and within a year, they went from like 70 cents to $5, got bought out. Within 5 years of that time, if you held on to that stock after the buyout, that stock was worth like $50. So management team is absolutely one of the biggest keys that people miss. Just don't get overly promoted by, just because you have a silver asset doesn't mean it's going to become a feasible silver asset. Make sure the management team has a history or the ability to execute.
we obviously have to talk about Apollo Silver. You have a history of following the Cinco de Mayo project, so I would love to know why you loved that project. I mean, I know why I love it,
Yeah.
and why it brought your attention back to it again now.
Well, so many years ago, we promoted a company called Mag Silver, which just over the last few years got purchased by a bigger conglomerate, that entire company for a few $1 billion. And one of the things I was really excited about was not their core asset, which we knew was one of the highest grade undeveloped silver assets at that time that the public was able to invest in. But Cinco de Mayo has done something that we've rarely seen, and that was show how big these CRD systems can potentially be. And for many years, I've arguably chased that project and wanted that project to exist available to the public markets, but they were stuck because of some historical issues. And again, this is one of the criterias of what we just talked about, right? If management can execute on things where there seems like there's a lot of risk, but they can de-risk those risk factors, that's where you're going to see the most return for your capital, because we know what the asset's good, but if it can be de-risked, it's going to be phenomenal. And Cinco de Mayo is arguably, as we know today, based on results, it could be one of the largest undeveloped CRD projects in the entire world. And these CRD projects, I wouldn't say primarily exist in Mexico, but they do, right? You're going to find the most of the ones that have good economic benefit in Mexico. And Apollo Silver just happens to have an option on this incredible asset that if they can de-risk the social issues, and it sounds to me like that they can, it is a game changer, not just for the silver market, but for Apollo Silver and shareholders of Apollo Silver. And just full disclosure, I'm a shareholder. I'm a consultant to them as well. But I've been following, and that's primarily the reason. So I had a chance to invest in Apollo Silver at lower prices, and I did, but not to any big degree of scale that I normally do with my holdings. But when they optioned this property is when I said, look, guys, I'd love to work with you guys on this because I've been chasing this project for 10 years, more than 10 years.
100%. And I feel like the management team has the skills and knowledge to get that done. So it's it's an exciting story to roll out this year.
Yeah, and I can tell you, it's run by really strong capital markets focused management. Andy Bowering, who I know, I actually just saw the other day. No one works harder than that guy, and if he's got confidence in their ability to execute on this project, I do as well.
The story has so much potential, even with their Calico project in San Bernardino. And as we've talked about throughout the show, with the US driving, it's a great story on both sides.
Yeah, so Apollo Silver is one of those rare instances where we talked about the US and wanting US based assets. And Apollo is one of those rare opportunities where you have access to not only the largest undeveloped primary silver deposits in the US that's investable by the retail public. The largest is, I believe, a private company. So if you're looking at for primary silver projects in the United States, Calico has the largest one that the general public can invest in. And secondary, they have what could arguably be the largest undeveloped CRD silver asset in the world. So you kind of are having the piece of the pie and the icing on top as well. And if they clear those social issues at Cinco, it is going to be a massive game changer for the silver industry. Like it's going to be at the top of everyone who's involved in the silver space, on the top of their inbox and the top of their focus for sure, especially the funds and institutions, because the funds and institutions know how big Cinco is, could become. And the fact that you've got a backstop of the largest undeveloped primary silver deposit that you can invest in, it's a win-win.
Ivan, as we come to the close, is there anything you want to share with our following or investors about, what to pay attention to as we move into 2026? Key catalysts, or how can they reach out and get a hold of you and sign up for your newsletter?
Just simply go to equedia.com. That's EQUEDIA.com to take a look at our newsletter. Our newsletter is very different from a lot of the newsletters. We don't publish a lot. We don't send you a bunch of email. Our theory has always been we will not invest in more than 2 or 3 deals that we present to our subscribers every single year. Right? We're not going to give you 20 and hope 1 or 2 sticks and then just promote those 1 or 2. We're going to give you 2 or 3 ideas a year, and those are the ones we stick with. And all of the ones we've done in the last, we've promoted in the last 3 or 4 years, we still own large positions in them today. So, having said that, I would say that for investors, definitely, like, I mean, Goldman Sachs just came out with a report, and they're focused on three major sectors, of course, for 2026. One of them is actually biotech, which we've said that is going to lead the race in the coming years because health and wellness are going to be a major factor. The second one is AI, as you already know. And the third one is critical minerals and the metals market. They believe that it's a commodity super cycle at play. And I could not agree with them more because when you have governments around the world fighting for these things, guess where they're going to get their money from? Well, they're going to print it. And anytime we print money, we know it leads to inflation. That is, it's not a byproduct of it, it's an absolute. You print money, it's going to lead to inflation. And because there's no way for countries to just say, turn on a switch and produce more of these materials, they're going to print more money and they're going to pay top dollar for it. So if you're not invested in the metals market today, you're going to kick yourself in the butt, kind of like the way you probably are kicking yourselves in the butt for not investing in AI earlier.
For disclosure purposes, Apollo Silver is a paid-for client on the Investor Ideas website.